My involvement in private equity, I think, comes from the passion about companies. I was a manager, I've run businesses, and private equity really is about helping companies grow faster, be more profitable.
Is working with people, working with real companies, working with the real economy, and being able to impact the real life of those companies.
Private equity is buying a controlling stake into a company, holding that company, actively manage that company to transform and grow it, and then selling it back after 3 to 5 years, hopefully with a profit.
In private equity, you don't have the quarterly stress of publishing results. What it matters truly is growing the business, make it a sound business. The very famous men's suits brand that was held by a private equity company just before the crisis. The company was almost a complete write-off, but the general partner did a great job working hard with the management at the end of the day, making very good returns. That would never have been possible in the public market.
We select private equity managers. These private equity managers invest and select private companies, and they pool these companies in a fund.
They will have advisors that are former CEOs of very large companies, former consultants, specialists in debt financing. The way in which they operate with the companies has a lot of added value.
The difference between investing with the best managers in private equity and with the median managers means a lot, especially in this asset class. The best managers of the asset class are oversubscribed. If you don't have the network, you don't have the access, then you're not going to get into that.
Having built long-term relationships, sometimes over 20 years, with some managers, gives us really a privileged access.
When you select a manager, he will invest in maybe 10 to 30 companies, so it will give you a huge diversification in terms of geographies, sectors.
It could be healthcare, it could be industrials, it could be manufacturing, distributions, energy.
You invest in companies which are not public, meaning they are not listed on a stock exchange.
We have, however, a very high level of transparency, so we're able to understand very well what is in our portfolio. There is no black box.
I know exactly what strategy, what type of companies they will target.
We make sure that they're going to invest not only in sectors that are within our scope, but also behave in a very ethical way.
For instance, last year we looked at a lending business in the US to customers that cannot afford to buy a house or even a car sometimes. We digged really deeper into the company. And during the investment committee, one of the main discussions was about ethics. Is it ethical for us to invest in such a company? And in the end, we decided not to invest.
It's very long-term investment with interesting returns, but you need to be patient.
Some years ago, a small company, family-owned, that were doing their pastries, they didn't have any presence abroad. And so this fund went to them and say, we want to work with you, we like your brand, your product can be exported, and we are sure that many people around the world will like it. So they really helped them to implement their brand abroad. So they open flagship store now everywhere.
The way we measure our success comes from the satisfaction of, it's not only about the financial returns that we provide to our clients, which of course at the end of the day is the objective, but the greater satisfaction comes also from the fact that those companies really transform themselves. This is the real satisfaction.